Good day, guys. Welcome to Forex Walker. Welcome to episode 63. On this episode, we are reminding you guys about the Euro Turkish lira. On the previous episodes, I believe it was at the beginning of the Forex Walker channel. I was talking about how much I did not trust the euro, and remember, the most powerful currency between the euro and the Turkish lira is the euro. The euro being an index. Now, an index is a composition of uh, different currencies or different economies combined together. So that forms an index. So the euro is not just one country; it's a current. It's an index with the eurozone countries combining their economies together to form one currency. So what I how I trade the euro is that I look mostly into the three largest economies in Europe, and those economies are France, Germany, and Italy. I used to look into the fourth currency, which was the pound, but after the Brexit, the exit of Britain out of the eurozone, we ended up with those three large economies in Germany, France, and Italy. So when you align, whenever you see an alignment in those three large economies, if all of those three economies are giving you bullish economic reports, you can buy the euro comfortably. But once you end up with one of those currencies giving you a bearish economic report, and the other two economies giving you a bullish stance, you end up with a situation where you have to choose whether you take the trade or not, unless if you're trading the euro with a currency that is much weaker than expected. So that's how you can survive. But I don't really. So my intentions is that I invest less money looking at those three large economies. And in this case, I had conflicting signals, and the sells were taken based on the Danish krona, which is highly correlated to the eurozone. So that's how I was able to hold sales. But I do not trust the euro because of the misalignment in those three large economies. So we had to liquidate this trade. As you can see, it went all the way up there above the previous shoulder, and it held equal highs up here to equal the previous high. So that's how I ended up liquidating halfway here, because I was expecting this last pullback to actually pull us lower, but it went all the way up there. This was the volatility index. I did not expect it to do that, but because the euro is the strongest economy, that's how we ended up pushing all the way up there. But the euro and the pound together did not give us that much of a pullback in that volatility index. So this is just an update. I will be looking into the performance in this currency and show you that it actually ended up hitting the take profit levels. So for those who are willing to take this trade, you can take this as the 50% fee. You can actually trade it this way. Look, you can look at it as the 50% fee and a rejection from the 23.6 here or above, and expect it to drop all the way down there, which is up here. This would be your take profit level, and I'm not expecting it to go all the way up there because I don't really trust the euro, and the global economy is already done uh, with the pricing in of the global markets, and we are moving towards the closure of the year. And that's why you should just expect this market to drop down here and stop doing all of those bullish stance on you. So, well, that was not what I called you here for. I called you here for the WTI crude oil. The US president just introduced new sanctions on the Russian oil, and this was well expected by myself because this whole thing was started by the Ukrainian president saying they should sanction Russian oil because the previous sanctions on Russia did not really work out that much, and the Western countries actually ended up preventing. A Russian oil tanker, a ship that was transporting oil to India. They prevented it from traveling through Europe into India. So because of those things, I was expecting an increase in oil prices. Remember, the oil market when it goes the oil market when it goes bullish, this is not good news. This is actually bad news because these oil prices do not say a bullish move is a good thing because high oil prices affect the logistics industry and they affect the prices of the logistics that are being transported. The reason being, when you transport logistics with expensive fuel, you need that fuel has to be counted into the prices of the products that you are transporting, and that results in that gives us uh, high prices in all goods across the planet, and they affect the global supply chain pressure index. So that's the reason why when you see a spike in the oil market, you see a collapse in the global supply chain pressure index. So these sanctions on Russian oil. Remember, Russian oil is the cheapest oil in Europe, and Germany was one of those countries that continued to buy Russian oil, and it was an issue between the United States because of that. But Russian oil is actually the cheapest, and once they sanction Russian oil, all of those countries need to go to an alternative, which is the second largest oil producing company, which is Canada. Uh, Oil producing country is Canada, and the Middle East countries follow suit after that. So, uh, because of this Russian oil being sanctioned, we are going to have a spike that will pull all the way up there. The macroeconomic reports on the Canadian currency are actually temporarily bullish, but because of the Canada is the alternative market for crude oil, all of those countries are going to take the Canadian uh, oil as an alternative, and that's why I'm expecting a bull run in the oil market here and a bull run on the Canadian currency. And because of that, and because of the oil market doing what the oil market is doing, I'm actually expecting the famous. I'm having issues with my mouse. I'm expecting the famous uh, CAD JPY that I'm currently holding to uh, move all the way up to the previous high here. I'm expecting the Canadian dollar to move us out of the recession, which is the previous high here. That's those are my expectations. And this bullish run in the Canadian dollar is a temporarily bullish run. I was talking about my expectations of taking profit at the 50% fee or up here a little bit. I was expecting it to be there, but because of the new US sanctions, I was expecting to take profit here at the 50% fee. But because of the new US sanctions on Russian oil, I'm expecting the Canadian dollar to actually take us out of the recession once and for all, because Canada is the second largest oil producing company in the world, second to Russia, according to what I know, should I say it's the alternative of is the alternative from Russian oil, and because of that, I'm most of the time the Western countries they use it as an alternative for the oil market, but Canadian oil is actually expensive compared to Russian oil. In fact, Russian oil is the cheapest oil uh, uh, across South Africa, across the whole planet, not South Africa. So that's the so the Canada will be the alternative, but an expensive alternative, and that's part of the reason why the uh, the Germans insisted on buying Russian oil, but they have recently stopped because of the U.S. sanctions. So the alternative is the EuroCAD, where I'm expecting the euro to keep getting weaker and weaker, and the CAD to keep getting more bullish. And that's the expectation. That's those are my expectations. Now, volume is right here. When we broke the previous high, went lower. We're expecting to break this previous low here, which is the 50% feed. And in case the market decides to reverse, I'm expecting it to reverse to the 23.6. But with the recent sanctions on Russian oil, I'm not expecting pullbacks in this regard. I'm actually expecting this market to keep moving all the way down there. But if we do get a pullback, I'll be looking into holding a second position into that pullback. And this is the highest I can go in a pullback. So I'll be looking to uh, hold a second position into that bearish move. And if this, as you can see, we have two candles giving us two lows. I'm not expecting a pullback, even though we can see that we have two lows here. I'm not expecting a pullback. But if we do get a pullback, this is the highest I can go. I'll be liquidating my largest position and allowing the second position to come all the way up here, and wherever it turns around, I'll wait for it for the market to turn around, and when it does, I'll be selling the market all the way down here. But we are moving to we are already in Q4, the fourth quarter, and because of that, I will be liquidating a lot of uh, third quarter investments and focusing on the fourth quarter. But because of the oil market, I will insist in holding those CAD trades for as long as I can, based on the WTI crude oil market and the sanctions on the Russian oil. Those are my expectations. And yeah, I'll see you guys on the next episode. This is geopolitics, and that's how geopolitics operate. Let's. I just want to let you see the price action part of this trade. For those who trade price action, they normally look for first touch, second touch, the third touch normally manipulates, and the market drops all the way down there. So that's for the price action traders, and that's why I'm holding these trades. Goodbye, guys. See you on the next episode.